think in terms of the easiest way. People say, give me a reference of seller financing that everybody can relate to. The car industry. You buy a car. Maybe it's a used car, or whoever, your secretary buys whatever that is, right? Somebody buys a car and the car dealership carries the financing. They seller finance the car. Does that make sense?
It does.
Instead of seller financing a car, you seller finance a property. So you're not renting it anymore. You're transferring the deed to the new guy. But you're saying, wait a minute, I'm going to be your bank, and I'm going to carry long-term financing.
You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. Downloadable audio episodes can be found in the podcast link found at drawincustomers.com. We are locally underwritten by the Bank of Sun Prairie, Calls on Call Extraordinary Answering Service, the Bold Business Book, as well as Live Switch. Today we're welcoming / preparing to learn from Eddie Speed of the Note School. So Eddie, how is it going today?
I'm great. How are you?
I am excited. We're talking about real estate notes, and I got to admit, I don't know much about that at all. So I'm excited to learn from you. So let's start with the basic foundation. What is the Note School?
Well, Note School teaches people how to be the bank. There's basically two ways you could be the bank. You might have a rental property that's far more profitable for you to finance the rent property than continuing to pay rent and taxes and insurance and the plumber and all that, right? Or you may say, no, I don't have a rent house, Eddie. I like the idea of being a bank. How would I find a note? And so we have run a school for 25 years showing people how to go be the bank.
So help us with a foundation here. A real estate note, is that essentially the same as a deed, or what is that?
Well, a note is what we all sign when we go to the title company and buy a house and get financing.
Gotcha. So it's the loan on the property.
You sign a promise to pay to the bank. It has an amount that you owe. It has interest. It has a monthly payment. And then you sign another document that says, if I don't pay, the bank can foreclose. Usually in some states, that's a deed of trust. In some states, that's called a mortgage, something kind of like that.
Okay.
Yeah.
So if somebody has a property, is this, I guess in this case with the notes, is this you are helping somebody purchase the property? So instead of a bank, they'd be using this person?
No, I am pretty specialized in the business. And so we help people seller finance.
Okay.
So I deal with a lot of landlords, I don't usually deal with too many mom and pops. Normally the people that I deal with are people that are real estate investors, some really big, some super small, but normally they're a real estate investor. And so I help them create notes, and I buy notes that they've already created. In the narrow little world of seller financing, I bought 50,000 seller finance notes.
Wow.
So
I feel like that's a lot.
It is. And in that little industry, it is. And so we've got a seat at the table in that industry. And so we find a lot of these notes, and we spend a lot of energy trying to find them, right? So we do pretty good at that. And then right now we have a really active program and a lot of the podcasts and things I do, people are interviewing me like, okay, how do I convert my rental to seller financing? Because rentals aren't making near the profit they used to. Inflation messed up the rental model.
It turns out as I interview people that are in the real estate world and I look at the rental property world, I'll reach out to a real estate agent and I'll be like, hey man, from my point of view, a rental property is a business. You look at what it costs, acquisition costs, and then the money coming in, the revenue, the expenses. I don't see how some of these businesses are making money. Who would buy this? This is not necessarily a failing business, but it's a business that's going to cost you money rather than make you money. Unless you're working on speculation and saying in 30 years down the road, this is going to be worth more. So
We help
But
people get paid now versus having to wait for appreciation.
gotcha.
And if you just look like this, would be kind of an easy way to think about it. The average rent in the United States is about $1,800. Now
Okay.
that's Ohio and California and Iowa and
Let's take in
whatever,
the whole U.S. So you got New York and San Diego, and you also have
everywhere in between, right?
the middle of nowhere,
So the
Kentucky.
average single family house rents for about $1,800.
Okay.
That's not an apartment. That's not a duplex. That's a single family standalone house. The average payment that a brand new customer pays, their mortgage payment, is 138% of rent. Okay? So that tells me the banks are getting a bigger payment. Now, that includes taxes and insurance. So you got to saw a little off of that, right? But even if it's 110%, 115%, people's mortgage payment is more than rent. But wait a minute, if I'm the landlord, half of my money runs out the door in paying expenses. And if I'm the bank, none of my money runs out the door. So it doesn't take a long spreadsheet to look at the math and go, you know what, Eddie, it is more profitable for me to be the bank than the landlord.
Gotcha. So tell me, who is coming to you?
In the last 2 weeks, I've been to the largest 2 real estate masterminds for house people in the United States. So
Okay.
call it top, 800, top 1,000 house buyers. A good percentage of them are one of those groups, or another couple that I'm involved in. I sit down with a guy on Friday who's a fractional CFO for other real estate investors. So he helps other real estate investors with their math, right? But he has 275 rentals. And he knows me from the past. He says, Eddie, I want to convert all of my 275 rentals to seller financing. You don't need to convince me. You've already convinced me in the past. You're right. Your math, what you're saying is true. Just help me with the process. So I build a back office for them so they don't have to go do it. So we help them do all the things to create really smart seller finance transactions, not homemade looking, well underwritten, well structured, including me coming in buying part of their notes so that they can pay off underlying mortgage debt and do all that stuff. And so I basically help them become a mortgage bank. But they're outsourcing a lot of the process to go do it because it's not what they have internally. They don't have a shop built to go do it.
Gotcha. So is the idea
that could be somebody on this podcast with 5 rentals, or that could be, some realtor that goes like, oh my gosh, I've got all kind of clients that would convert their rentals if somebody go do it for them.
so if somebody owns property, is this essentially the equivalent of refinancing, just not through a bank,
No, you're just changing the use of the property.
Okay.
In other words, think in terms of the easiest way. People say, give me a reference of seller financing that everybody can relate to. The car industry. You buy a car, maybe it's a used car, or whoever, your secretary buys whatever that is, right? Somebody buys a car and the car dealership carries the financing. They seller finance the car. Does that make sense?
It does.
And so instead of seller financing a car, you seller finance a property. So you're not renting it anymore. You're transferring the deed to the new guy. But you're saying, wait a minute, I'm going to be your bank and I'm going to carry long-term financing, because the math is just, people say, well, what's the best time, Eddie, to be in the note business? And I started in 1980. Okay.
Wow.
What's the best time to be in the note business? I said, there's 2 things. Either it's inflationary times or disruptive times. So right now we have both.
I was just going to say, I feel like we're checking both those boxes now.
Yeah. Yeah.
Tell me a story about the large real estate investors and the small real estate investors. What does a metric look like there? How do you distinguish those two? Or is it dollar amount, or is it doors, or is it property
Probably
size?
number of transactions in a year. So these masterminds, there's different levels of them, but the ones that I go, the kind of the premier level that I go to, those guys probably are at least doing 100 houses a year. I mean, look,
Wow.
there's guys there that do 10,000 houses a year. Like, are
10,000 houses a year.
they're not a huge amount. There's several guys that do more than 300 houses a year, like a good many of those.
That's a lot.
And
That's
so
There's some
these
towns that don't have
are
that many
guys,
houses.
yeah, these are guys that have built ninja business buying houses.
Okay.
And I'm a specialist, but right now there's 18 million rent houses and not many happy landlords. So it's a pretty big pond to fish in.
So if you're a landlord, what is the advantage? Just help me walk through the math here.
The advantage would be if you're netting $900, you might could net $2,100 if you finance the same house you're renting right now, net income.
Okay.
It's worth testing it out.
Okay. So if we just for, I don't know what easy numbers would be to look for. If I got a property that's worth $100,000, just for easy math, can you help me with the equation there? Just walk me through that.
Yeah. So, like, and I agree with what you're saying. People kind of label $100,000 houses, that's too cheap today, but it makes nice round numbers, right?
Yeah, just I'm not. I mean,
Let's
if you
just
can find a
say
house
that
for
you
100
sold the
grand,
house. Let's just say that you sold the house and you owner financed it, and you got 15% down from a new buyer. And by the way, we can help you find a realtor and have realtor oversight to manage that realtor. So this isn't just any realtor. This is a realtor that's been specially trained to go find that type buyer. It's not like they can't prove their income. It's not like they have bad credit. We're not chasing people that don't need to be buying a house, right? We're chasing people that we believe are the underserved market, right? So they're going to pay 15,000 down, 100,000, 15% down, and then that landlord will carry 85% of the note, or 85% of the financing, which is an $85,000 note. So their monthly payment's going to be $850 a month, something like that. $800 a month, and yeah. And so if they rented the same house, they're probably netting $300. Now, once again, I don't want to, that's a little cheap for the market today. So I don't want people to just use the round numbers and think about that was an easy way to get a frame of reference.
you can compare to percentages.
Usually the math is between two on the bottom end, about 2 times the net income. We've seen it as high as 3 times the net income.
Wow.
And so it's pretty cool math. And you're right. People say, well, I don't get depreciation. That's true. And they say, I don't get appreciation. And that's true. But number 2, you got the appreciation now and you don't have to wait for it. Right? You're getting paid now. You just don't have to wait for it. And we've got all kind of things that how we can show people to, quick analysis to figure out like, oh gosh, you're right. I am getting paid for it. I just didn't think about it that way. And then the answer is people say, well, there's no tax hacks if I owner finance. That's not true. Because the IRS says that you can pay them capital gains when you get the money, not the year you sell it. Right? Installment sales. And so you can stretch out when you pay, and depending on your tax bracket, that may mean that you earn such a low amount of capital gains per year, you may not even have to pay tax on it. There's some of that possible. And the other thing is the long-term depreciation, they let you stretch it out and pay it out over the life of the loan. So there are kind of some tax hacks with it.
Are there any properties that this is not ideal for?
Yes. We deal in very middle class property. So property that is in substandard neighborhoods probably don't make a perfect fit, right? and or properties in really bad condition, or properties that really are like an executive home. Like it didn't work near as well, depending on where somebody lives. But a $750,000 house doesn't work as well as a $300,000 house, right? So, and depending on what market price range is normal, medium price property is kind of the target. And there's probably a range off of either side of that works well. So we are serving an underserved market, and we really, 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 I mean, I don't think a lot of people totally realize this, but about 40% of all loan originations today are not agency loans.
Wow. I had no idea it was that big. Okay.
And so just because somebody doesn't listen, I'm self-employed. I'm involved in about 9 different companies. Like, they don't really like me in the traditional put me in the box W-2 employee box.
That is very true. Very true. Yeah, it's interesting because when we refinanced our house back when interest rates were dirt during the pandemic, the banker, I remember him suggesting that we only use my wife's W-2 income on the application because I'm self-employed. And he's like, oh, that gets a little weird.
I'm
like,
telling you.
I think I make more money than her, but it's just easier for them to be like, here's the W-2, rinse and repeat, away you go. Versus
now there's another little caveat to this.
Okay.
Most people have an underlying mortgage, and they go, well, what do I have to do? And we're saying, like, look, we're going to help you liquidate part of that note income. Buying and selling mortgages is what I've been doing for 45 years. You know what I'm talking about. You have a mortgage, and all of a sudden a letter shows up in your mailbox and says your loan has been sold. Your payment doesn't change. Your interest rate doesn't change. It just says your loan's been sold. And now instead of paying First National Bank, you're paying Main Street Bank, right? Whatever. And so it's common in the business. And so we help people. And that's where I build a marketplace. So some people need to sell part of their note, and I create a market where they can do that. And then some people say, I want to buy part of that note. And so I've built a marketplace where people can do that and do it very efficiently and with confidence. When I was talking to my assistant before we filmed this podcast. And, it's kind of about business mistakes, right? Right. And that's I love it. Like, because all of us with gray hair, we got way more bombs than we've ever had, things that we were brilliant at. Most of the things that make us really good is because we're forged in fire, right? And the answer is that I just don't make as many mistakes along the way as I used to, because I've kind of tried a lot of stuff and I know kind of what won't work. But my job in helping people do this business is to give them confidence. Because confidence is when people will take action. People that don't have confidence have a high tendency not to take action.
Oh my gosh, incredible amount. Yeah. Yeah, it's very interesting chatting with people that are anxious, not confident, and they just can't make a move. And you want to tell them, look, man, just jump, right? You can't. The decision not to make a decision is a decision. So if you're just going to stand there and think about it, your decision is to just stand there.
You know what I've noticed? Like in the training business of real estate oriented training, my end of the spectrum is I tend to train people, with a little, whatever, like they're a little more educated, not 100%. Because listen, I'm the poor boy, come from the mobile home thing. All that's my story, right? So I have a heart for that for sure. But I do train people with, that have been successful in something else, and they've got, they're pretty smart. And and I have to get them not to overthink the deal. And that is because I had to really get clear about how to give them competence that lead to confidence.
Mm-hmm. Interesting. And how do you do that?
Well, today, how I do it is I show them the process that we put a transaction through. And somebody goes, I don't know. I don't know about being the bank. I don't know what I'd get paid, or I'd be scared to death. And like, I don't hear landlords saying that, and they have defaults all the time. I mean, the likelihood of having a rent house for 8 years and having a problem with the tenant is almost 100%.
Yes.
Me having a note and having a problem with the payer in the next 8 years is a pretty low percentage shot. But see, they don't know that until they know what we do and how we do it and how we avoid chasing deals that look like they're going to become a problem. And so I would say that just showing people a risk management blueprint that in real life is what we really operate with, all of a sudden they're like, oh, okay, I see that.
Interesting. So most
people pay the bank back, right?
Yeah. Well,
Okay.
I believe they do, but I don't. You probably have a statistic there that tells me wrong.
No, I mean, they do. I mean, there's been markets where there was really aggressive underwriting, which led to, all of that, right? But if underwriting is reasonable, the odds of a mortgage loan being successful is pretty high percentage shot.
Right. Tell me about the people attending your classes. What is their goal?
Well, it's a good question. Some people are a young Eddie Speed. I was 20 years old. I was living in a 10 by 40 mobile home. I didn't have any money. And I met a gentleman that later became my father-in-law. He wasn't at the time, and we weren't really even dating at the time. So it wasn't like it was, he rescued me because he thought I was going to marry his daughter the second we met, right? But I will say one thing. The thing that I had in me is tenacity and taking action, right? Because I didn't have any money. And he showed me a path to go basically become a bird dog for him. And so I started out in the business with no money. I started out with his money. So I train people how to go do this, and they start out with our money, right? They don't have to go be the bank. We've got the money. We just need them to go chase the right deals, right? And so there's a way that you can do that all the way to somebody that shows up and says, look, which is super common. I got a rental portfolio, and my spouse said if I buy another rental, there could be a divorce. Like that, figuratively speaking, right? And so they're trying to, they like real estate, but they're looking for the easiest end of real estate. So think about the two spectrums of real estate. You could invest in a syndication, and you don't have to work. But you also have zero control. Or you can invest in a rent house and you have control, just more than you want. You own this note. When we sell a note, help somebody buy a note, they own it. I don't own it. They own it. So they have control, but it has on the workload very close to about like a syndication would be. You can sell it. You can buy it on Monday and sell it on Friday. So you can create liquidity with it. Good loans are more liquid than real estate.
Wow.
Look at the mortgage industry.
So tell me more about that. If you got a loan, you have this note, where you're not just going to the Craigslist or Marketplace or something like that to try to sell this thing. Am I going to someone like you to market this, or
I've helped people build a marketplace.
Okay.
And so and we're working at more and more efficiency. Within a year, we'll be selling loans on blockchain. Now that's not today, but all of the things in order to do that are in motion. Right? And we're not at the blockchain level at the moment, but we're definitely selling loans that have a high level of liquidity because they're good loans, they're underwritten. We're dealing with a group of people that have a comfort level with it. If I tell people say, well, I don't know if I'd have a comfort level in being the bank. I'm like, do you have the comfort level of being a landlord? Because that's way riskier than the bank. So it's not hard to find somebody that does it once they get, they go down the road a little bit. And when you introduce me, which is very common, you're saying, I don't know anybody else that does this. And the thing is, I would say, would you rather be in a business where everybody and his brother is chasing the same deal? Or would you rather be in a business where you don't have to fight, you don't have to go fight over and get in front of 20 people to go find a good transaction that you should be doing? So it's not as competitive. And I feel like it's, like we're continuing to train people to do it, but there's 18 million rent houses. There's tons of landlords. So understand there's not as many people that do it. And I don't think there'll ever be as many people that do it. But once we show people what it is and how it works, it's very unlikely somebody goes, oh, I'm not interested in that at all. Like it's almost a 0% chance of that.
Interesting. Tell me, just so I can wrap my head around this, and I apologize if I sound ignorant in this. I'm just trying to wrap my head around this. Let's work from the players of the game and the materials that we have in the game, right? So we have the property itself. We have the liquidity, so the value of that property. We have tenants. We have the owner of the property, who I'm going to say, is the owner of the property considered to be the same as the landlord in this transaction?
Yes.
Okay.
Yes, sir. Yes.
And then we have you, essentially, or your business, right?
Uh-huh.
The marketplace. Am I missing any players there?
Yeah. So the property currently is used, and the way that the owner of the property is making money with it today and in the future is they're basically renting out the use of their property. They are a landlord, right? And they're probably asked to do some things that for them are pretty difficult. They're asked to like underwrite a tenant like they're somebody that owns 3,000 apartment units, right? So they've got to do underwriting. Then they have to be the service guy that if something goes wrong, then and you're thinking, well, I'll just have a realtor manage it. Then you got to manage the realtor. You do know that realtor makes a spiff on every time they call the plumber. They make a little fee on that. Over and above you're paying them a management fee. So you kind of got to monitor things, right? So when you really look at that whole business, I'm just eliminating the fact that they got to go be a lot of things just to make a little income every month and wait for appreciation versus the fact that they could say, you know what, I'm the bank. I have a loan servicer that you make your payment to. They monitor the taxes and the insurance. I'm kind of like the investor that gets the money wired to me, and I don't have to go administer the business to go do it. So it's just easier.
So that it sounds like there's an additional player in the game that would be a buyer.
A loan servicer. And yes, I'm going to sell it to a consumer buyer. They're going to live in the house.
Okay.
I'm not selling it to an investor because, I have to make his payment low enough he can pay taxes and insurance and the plumber and all that stuff. But you own a personal home. What do you do if you call the bank and you say, my taxes went up?
They'll say, yep.
Yep. Right. And so you think about your bank in the fact that you don't call them when the hot water heater goes out, or you don't call them if the carpet needs replacing. So think in terms of if the bank's workload is way different than the landlord's workload.
The buyer is someone that's going to live in the house. So there's no longer a tenant.
That's correct.
Interesting. Okay. So is it harder to find a buyer or harder to find a seller?
it's without specialized knowledge. It's not. I say it's not difficult. It's just like anything else in life. If you don't know how to use it, you're not going to use it near as well. So we figured that out, and so we have a specialist oversight realtor program where we have some ninja people that have trained nationwide realtors and have networks of realtors they know from around the country because they've come from big brokerage operations, right? And they find a realtor in that market that they probably have experience with in the past, and we give them very specialized training on how to find good buyers that need seller financing. Now, most realtors don't know how to do that, right? So it's a specialty. And think about what you do every day. It's a specialty. I mean, you're self-employed and your podcast and all the things you do. You don't probably, if you look up and down your street, you don't know anybody else that does what you do. Okay, well then I don't know people that do what we do in seller financing, but I know that after 46 years, we've kind of figured out how to do it.
Right on. Now you mentioned ninja a few times. We're talking no income, no job. Is that right?
No.
Okay.
Not at all. No, this is not weak underwriting.
Okay. I heard ninja and I'm like,
when I say ninja, I mean like a ninja real estate investor. I mean somebody that does it at a very successful level. That's when I use that term, that's what I was referring to. I'm sorry, I used that in the wrong context.
No worries. I was like, wait. We've been through 2008. We know how this works.
Yeah, no. We're not. Listen, we've kind of already tried most things in the past. We've kind of dumped all the stuff that doesn't work.
Right. So when someone is looking for, as a buyer, someone's looking for seller financing, what is the problem that they're typically solving? Is it that banks are kind of a pain, or the banks won't lend, or banks will lend, but their interest rates are high?
So one of the typical things with people that need seller financing is their income is not just traditional salary W-2 income. Like you and me and people that are in sales, or people that are bonused, or people that have a contract, like work for Google under a contract, right? All of that becomes some reason that we have found out. You find really good people with good credit, good income, good down payment, all of that. They just don't fit the traditional box. And mortgage lending is much more strict than it was before the virus. This is an estimate. Okay. So if I'm slightly off, I may be slightly off by 5%, but I'm not terribly off. Okay. If 1,000 people could have gotten a traditional conventional mortgage in 2019, about 550 of them can get a traditional conventional mortgage today. According to Mortgage Banking's chart they call the Mortgage Credit Availability Index.
That changed that much over?
Underwriting is that much tighter.
Wow. Okay, I guess I didn't realize that stuff changed. I just assumed it got looser. Interesting. All right. That's a big change.
I mean, and so you go back and look at something that I said. The reason rentals aren't making money is because of inflation. We have some disruptive things in the market today, right? And so what do? Go dig a hole and go live in an underground? Or do you find out that there's some proven strategies that work in some imperfect times? And that's all that we feel like we're helping people do, is because I'm helping people with home ownership. That's a pretty cool thing.
That's very cool.
I'm helping people with home ownership that otherwise might not be able to have it. And they are prepared for home ownership, right? They're not, like, some people aren't prepared for home ownership.
Fair.
They're not the shocker invoices they may see as a homeowner. They're just not quite at that where they need to be for that. So they're better off to be a tenant than a homeowner that's made a bad decision and shouldn't have tried it. So I try to push people away and say, look, you're just not. Sometimes people come to us and we just say, you're just not ready yet. Right? In a loving way.
Sure. No, I get it. I can remember my first house when we had a major appliance. I think it was a water heater go out. The water heater itself was probably 30 years. And so it was a surprise, whatever, few grand that we had to pay.
Yeah.
And that was a kick in the gut. And the kicker, the double kicker, was when the plumber that was installing it told us, hey, don't expect to get 30 years out of this again. And I was like, whoa, what do we just pay you for, man? I don't want to have to deal with this more often than that.
Yeah, like
it was interesting. Like, oh, we get to look forward to replacing these appliances every 5 years or decade. That's great. I love that.
Don't last as long as they used to. That's correct.
Yeah, that's so awesome. Thank you.
Yeah.
So the people that get to be the homeowners that pass the test are like, yes, we can handle a bad water heater or furnace or whatever.
Yeah.
Know how to mow, get a lawnmower, all that jazz. What is the advantage versus disadvantage of, I guess, going through this versus a bank?
Well, we're not competing with a bank. We just serve an underserved market that the banks aren't serving.
Gotcha. So the bank essentially says no, or it's just not an option.
The bank is, and go ask any realtor, the banks are tougher on underwriting than they were. And that stat I just gave you is a real stat that came from the Bankers Own Association, Mortgage Bankers Association. So I didn't make up the stat. I'm just saying it. And it's very shocking to me that you don't claim to be a real estate guy. So wouldn't at all shock me you didn't know that. But I have people that are lifelong real estate investor guys, and they didn't know that until I do it. In fact, it's funny. I have somebody message me and say, hey, I Googled that, what you talked about on that podcast, and you're right. I'm like, yeah, I know.
So it's so interesting to hear that, because I wonder, was that the banks throttling because interest rates were dirt, so many people were coming on and the banks just didn't have the money to lend? Because you get so many people that are hanging out at these 3.5% loans that are still kind of camping out there.
Well, there's market pressures that have caused mortgage bankers want to make more loans. Don't get me wrong. I mean, they're not looking to do less business.
Right.
But at the end of the day, there's a funnel that those loans have to go fit through. And when that funnel gets smaller, what you don't want to do is originate a bunch of loans and all of a sudden now there's no market for them. Right. And so, and there's many scenarios, but the bottom line is that we have a giant underserved market. And there's, everything from, all kind of specialty groups that we've kind of identified that, like, man, it's pretty frequent. Those people are really qualified and have good credit and good income and all that stuff, but they're just not, they're not being served in the traditional mortgage market as well as they could. And make no mistake about it, we target them and say, maybe we could help. Maybe we're a fix. Maybe we're somebody that could help you with this in a way. And that's clearly what we do. So anyway, it's we feel like we're helping people with, we're certain that we are. We're helping people with home ownership. We're helping landlords that are frustrated with their situation. I deal with everything from fairly small landlords to guys that are just like have a whole bunch of them, like many hundreds of houses, right? And they're frustrated right now because they make about half the net income they used to make in about 2018 is about what the math is.
Wow. That is rough. That's a big drop.
Yeah.
Interesting. Tell me, when you're a seller in this case, does the seller typically own the property outright, or they still have a loan on their end?
They have a mortgage. And that's
Okay.
why we go in and create a liquidity event and help them sell part of the note. We don't
Okay.
help them. We don't help them. Not, they have to pay off the note to work with us.
Gotcha. Okay.
Yeah.
And is that a same day, same moment transaction?
Mhm.
Okay. Gotcha. So just a lot of people sitting at that title table.
Well, you know how the title company works, right? They take
Yeah.
all this money in and
Yep.
they
Divvied
disperse
up.
money out. Yeah. So that's
Yep.
how it works.
Gotcha. As a buyer, I don't know if can you talk about rates or terms or something of that nature? Is it typical 30-year amortization or
They're 30-year loans.
okay?
They're
And then
30
the
year.
interest rates are
There's
they?
so much noise about the 50-year loan that
Oh, that's insane.
I'm kind of a math guy.
Yeah.
Okay. So let me just give you some basic math between a 30-year loan and a 50-year loan. Now, this, as rates are a little different, it won't always be the same math, but just it's close to this. Your payment's about 8% less on a 50-year mortgage than it is a 30. Your payoff on a 50-year mortgage is about 8% more when you refi and pay it off in 8 years, which is the average time a mortgage is paid off. So there's just all these people get on Facebook and stuff and start, pontificating about 30 years versus 50 years. I'm like, you can't, if you could use a calculator pretty good, and I can, you'd know it ain't no big deal. They just, if you can't afford a 30-year loan, it's okay to do a 50 because you're not going to pay 50 years. You're going to pay it 8 and then you're going to pay it off. And then, you're going to refi or sell the house or do whatever. So anyway, I'm not opposed to people doing longer term loans, although in most cases we find the people that we're selling do not usually have an income problem.
Okay. So is it typical 30 or do they go 15 or 10 or even 5?
30 is normal.
Okay.
Yeah.
Gotcha. All right. And then tell me about interest rates. Is it more commercial or
they'll be slightly higher than like, the best loans in the market. So they're, Fannie or Freddie are the best loans in the market. But I will tell you this, the effective interest rate cannot be way off of where it is with FHA.
all right.
But if you look at all of the things that you're paying for, so it's somewhere in that range. The very best loans in the market are kind of the Fannie Freddie loans, and so it's not going to be as good at that. Nobody would expect it to be.
Right.
Not everybody has the same interest rate on their car.
No, not at all. Tell me a story about all the little fees that you see with banks, the flood fee and the title insurance and the just because we can fees and all that. Where it stacks up, where like your loan is this.
Yeah. Title insurance or flood, having a flood search, or if you're in a flood zone, having, flood insurance. Those aren't BS fees. Those are real things. Now, I might argue that title insurance is overpriced, but I'm sure my friends in the title agency would assure me that I'm confused, although I don't think I am.
Well, I would agree with you.
And but there's a difference between that and what you would call lender junk fees, right? Where they're charging you. In other words, it's a way to get their effective rate a little higher because of fees that they charge. And the thing about our business is that we just make it simpler than that. We don't charge junk fees when we're helping people create these notes. So you don't actually pay points.
Right on.
Yeah.
So tell me about the marketing side. You're trying to find these buyers. What do you do from a marketing edge to try to find the buyers?
We teach realtors to be very good at networking.
Okay.
Right. And of course, with social media today, there's a lot of networking groups. And so that's a very effective tool. And we've helped people do it across the country. So we've learned, some pretty cool strategies, but I don't want to make it sound like it's magic dust. First of all, the realtor has to go work. And that's one of the things that we do is that when we bring on a realtor, they're going to have to prove to us if we go find you a realtor, you tell us you want us to sell your house and you just want us to go help you with a lot of things. Eddie, go find me a smart realtor that's willing to work. Okay, well, we actually are going to do that, and we're going to make them demonstrate that this is what we think is an industry standard, that is what somebody should do. And you know this, a lot of realtors don't necessarily do the industry standard. They do less.
Much.
Right? So they're not a fit for us. But we do find realtors that are energetic and innovative and willing to be taught this kind of unique dimension. And so we're pretty good at that. We're pretty good at helping them do that. And then, once again, like, what do they do and stuff? Well, if they're just going to go put it in MLS and then, go out of town for the weekend, they think somebody's just going to come hunt them down in MLS to go find it. We're probably not going to use them. We think they need to work. They need to be smarter than that. They need to work harder than that. And we just try to teach them how to work smart.
So the boots on the ground doing the marketing are actually the smarter real estate agents that you've educated.
In my opinion, yes.
Okay. Fair. So with the note school, is it the real estate agents that are attending that?
I train everybody.
Oh, really? Okay.
I train I have all kind of realtors because they know they don't want to be a landlord.
All right.
I train, dentists. I train school teachers. I train some young Eddie Speed that was 20 years old that's got some hustle and willing to go do something. I think you can make more money doing this today than you can flipping houses, for sure.
All right.
And so there's an opportunity for, somebody young that's willing to go be energetic. And then if you're my age, your age, and somebody says, look, what I'm trying to do is to spend something that makes me spend less time. And so I think we serve kind of both ends of that market pretty well.
That's cool. And are you nationwide?
Mm-hmm.
You are. All right. Did it start out in a certain area of the country and then just branched out from there?
Yeah. Texas was kind of my base center to start from. Technically, I started in Mississippi.
Okay.
But when the guys I worked for pointed me kind of to Texas back in the early 80s, very early 80s. And my wife and I moved here in 82, Dallas, Fort Worth. But no, I bought notes all over the country.
All right.
I've certainly bought notes in all 50 states.
Okay.
Yeah.
And do you tell me about since you're doing nationwide, I guess the question is, you're doing a lot of this or all of this remotely. How do you look at the property, make sure it's real? Like, how do you make sure that you're not getting screwed? The boots on the ground thing after 2008 became way more efficient. It used to be a lot harder to find trusted boots on the ground, but after 2008 and all these mortgaging centers and insurance companies had properties all over the country, there's countless services and boots on the ground that can go do things. We're so good at that if I had a property right here in Dallas, Fort Worth, I wouldn't go look at it no more than I would fly to Chicago to go look at a house in Chicago. Wow. All right.
Just wouldn't do it. Because, it's gotten so efficient and we have such a good track record with it. We just know that works.
That is incredible.
Yeah.
That is truly incredible. It's funny. I was going to close on a property later this month that fell through, but I'm going on vacation. And there was this whole thing where like, oh my gosh, when are we going to have to sign? We're going to have to push the closing. I'm like, I can sign my taxes from anywhere. If I can sign my taxes from anywhere, I shouldn't have to be at this desk at that time to do this, right? Like, we got an internet. It's worldwide. What are we doing?
Yeah. The last time I physically went to a title company and signed documents, it must have been 10 years ago.
Oh, that's awesome.
And I've traded a lot of properties since then.
that is incredible.
I might go to a reception at the title company, a little party or something, but not to go physically go to a closing, not anymore.
Gotcha. That is truly amazing. So, Eddie, I know we don't have a ton of time, but let's get the details here about how people can find you. Note School, I imagine, is a remote education. Is that right?
Yes, note school. We do have some live training,
Oh, you
but
do? Okay.
so people will come to Dallas and come to a training, but a whole lot of people get connected with us because we've become pretty good at being virtual.
All right. All right.
Yeah.
Tell me, let's just start with the live stuff. How often are you having those?
So we probably have a live class about every 3 months.
Okay. So a
So
quarter,
it's not
sure.
all the time.
All right.
We have training all the time. And as I said, we got very good with virtual during the virus, and a lot of our people like it.
Yeah, I would imagine so.
So,
How,
usually what we'll do is this. Like if somebody will go and listen to um, an interview like this, right? And they're like, I think I'm interested in that. So what we'll do is give them a little starter series that's all virtual, all online, and we'll just go through something that we don't make it complicated. We make it pretty easy and pretty palatable to get what they want and learn what they're doing. And then somebody will say, "Yeah, okay, I want to go deeper." And and I think it's all how any of us get interested in anything. You couldn't decide you wanted to be a mountain climber. That probably isn't the first thing you do to go get involved. You say, "I want to go hiking." Then all of a sudden, like, I think I could climb mountains. Like most people would just go hiking and they wouldn't climb mountains. But we try to be easy with people and like get them the level that they're trying to get to.
Gotcha. That's fair. And the school itself, is that pre-recorded or is that a live training even if it's remote?
Oh no, we do live training every of some type all the time, every
Oh
week.
wow. Okay. Nice. And then how long is the
I'll
training?
do a live training today.
Oh, nice. All right.
Yeah.
How long is the training itself?
It could be anywhere from just something really short to it could be something that's an hour and a half.
Okay. All right. And what is considered graduation or certification, or when are they done?
I have people that have been with me 15 years.
Oh, wow.
I have people that get all that they need in the first 90 days.
Very cool. Very cool. And then this is a question.
Everybody wants the same thing, right?
Right, I believe so. Yeah, roughly. Yeah. The next question is, when I talk to real estate investment people of any type, wherever they're at, it's interesting to hear the stats, good or bad, about the people that attend the classes versus the people that attended the classes and actually did something with the knowledge. Because sometimes those don't always coincide. So of the people that attended the classes, how many people are really making something happen with that knowledge?
That's all to do with how far they go down the road.
Okay.
If somebody just gets something superficial and then they're going to go try to figure it out on their own, and Eddie, I can go to AI and it'll teach me everything. Well, who taught AI? I'm not sure it might, maybe AI, because I know that I can ask AI questions that'll give me the wrong answer to it about this industry.
Oh yeah.
Or I don't, people, the one thing when people really want to do this, the reason people love hanging out with us long term is that we do have a seat at the table in the industry, and they don't have to go build a back office to go do the business. My trading business, my note buying company can help them go find loans that we've already vetted and put through a process, and people like that.
I forgot to ask you, from a money standpoint, does that mean that you have investors that are pooling this money to help purchase some of these loans?
Not pooling it.
Not pooling it. Okay.
Yep. I show people how to go get leveraging with notes, just like people can buy a rent house and get a mortgage at the bank, right?
Okay.
So there's leveraging techniques that people can learn how to do, easier than most people think. And then, but no, as I said earlier, like, you own the note.
Right on. Right on. So when you mentioned that the seller has, let's say they got their mortgage, a traditional mortgage on their property, they want to go through this process, you help them find a buyer. The seller has to pay off the rest of that mortgage with the traditional bank. Where's that money coming from?
Me buying part of the note.
Gotcha. Okay. All right. And that's your business, or your investors in your business?
Well, I mean, I bought 50,000 owner finance notes. I didn't buy all of those notes with the money in my back pocket.
Gotcha. Okay.
So, I mean, I'm an investor in the business for sure, but sometimes it's, I've built a marketplace. So on any given day, I've got people that have an appetite for certain kinds of loans, right? And that means that I don't have to go fund everything myself, although we probably could, and then just resell it later. So it just depends on the circumstances. My mission for my customers that are going to sell us a note is their customer journey is really, really good.
All right.
So in order to do that, I have to have ready money available to be able to fund their notes when it's ready to fund.
Gotcha. Ready to go.
Yeah.
Interesting. Okay. And are the people, is it a note for a person, investor, whatever, or is it? Okay.
Yeah. You own the note in its entirety. You're not, it's like that's really, really critical because now you control your future.
Right on. What is the turnaround time for something like that? Like you find a buyer, you got the seller. Are we talking months, weeks, days?
Probably a month cycle.
Okay. That's relatively quick. I mean, most banks are 90 days or something like that.
It is. Yeah.
Yeah,
it's quicker than most conventional scenarios.
Yeah. That checks a lot of boxes. Eddie, I love what you're doing. It sounds very interesting. I'm super happy that you're helping buyers get into houses. That's a huge deal. So a very huge deal. And the banks, it's so funny that even when you have money, it seems like it's more difficult than it should be to get money from the bank. It's just a bizarre.
It is, unfortunately, in college and universities, they don't teach people how to transact business. And they don't teach people how to make money. And I teach people how to make money with money.
That's perfect. That's perfect. Eddie, what is the website where people can find you?
It's noteschool.com is the website. I have a little course, a little starter course if they're interested.
Yeah, what's that?
And that is noteschool.com/draw in. And it's just a little starter course. It's just if they like what I did today, then this is going to be like, okay, tell me more about it. The website's awesome, but it's a little more of a big picture.
Right on.
Yeah.
Right on. That's reasonable. I love it. This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. My name is James Kademan, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for service businesses across the country on the web at callsoncall.com. And of course, the Bold Business Book, a book for the entrepreneur in all of us, available wherever fine books are sold. If you're listening or watching this on the web, if you could do us a huge favor, give us a big old thumbs up, subscribe, and of course, share it with your entrepreneurial friends and those friends that may have a hard time getting a loan from the bank because they don't have the traditional W-2 job, or maybe they got some rental property and they're looking for other avenues for revenue here. We'd like to thank your wonderful guest, Eddie Speed of Note School. Eddie, can you tell us that website one more time?
noteschool.com/draw in.
Awesome. I love it. Past episodes can be found morning, noon, and night at the podcast link found at drawincustomers.com. Thank you for joining us. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.